All right, so I wanted to start doing a little chart review, so that way it kind of keeps me accountable for really doing an in-depth review. I feel like I've been kind of speeding through it a little bit too much, so I figured by doing this, maybe it'll keep me, going a little bit more depth into those reviews. So go ahead and get into it. This is from today. I'm not really going to go over like every single bar or anything, just kind of the areas where I think that I either messed up or I could do something better. And then also I pulled a lot of examples that were similar to a trade that I took today, or at least somewhat similar. So that way I could, maybe sort of talk on how it was different and what I can learn from that. So the first, and this was basically right off the bat today, was I took this loss here, and I took this as a double trap off the EMA. So you can see up in the top left, this short-term downtrend has a close outside and two swings to a new low. Okay, that basically plays out perfectly. But my thinking here was, okay, well, prices made this break a new low and they didn't come back to the EMA. So I know that sometimes whenever this happens, whenever there is a break in new extreme without prices coming back to the EMA, that there can sometimes be a trade off of the EMA that works. And I think I didn't have a full understanding of exactly when that is the case. Here we can also see this is Thomas's chart here, in which case he saw this just as a break new low. Perfect, yeah. But he was looking for longs here. So really the question is, okay, why is it that that is not the case here? Why is it that you're not still looking for a close outside and new low, even though this break new low happened without coming back to the EMA? And Mac, even, you can see all the way on the right here, was looking for longs in this area. So this is a pretty fundamental misread on my part. So I looked at a bunch of examples from Thomas to see, what maybe or when he might be taking a short even after a closeout side and new extreme. So let's see, the first example is right here. It's the second entry long, and you can see that this uptrend here, so this kind of shorter term uptrend, had a closeout side and new high. So why are we continuing to look for longs? Well, first off, the whole entire day so far has been up. You compare that to this day and it's been more range-like. So that's the first thing that I wanted to point out. The other thing here is after the break in new high, prices moved down. This downtrend wasn't able to get a new low and prices popped right back above the EMA. So that's very different than what we're seeing here. Here it's the first pullback to the EMA instead of moving through it and then coming back down. Okay. So how about this example? I don't exactly know where I'm pointing here. I think I moved around the picture, but it was, so this arrow should be pointing at this second entry long here. And the thing here is, okay, this uptrend already has a close outside new high. Okay, so why are we looking for longs? Well, there's a broad two-legged pullback. This one does pull through the EMA, so it's of course a little bit different, but there's a whole nother structure there. You can see the prices tested this 1, 2, 3, 4 times. So this is taking this less as a continuation of the bullish momentum and more so as just a multiple test that happens to also be a second entry long and two larger legs back. So this one is pretty different here. How about this one? It's a second entry long and a failed breakout, even though this uptrend, so the shorter term uptrend, already had a close outside new high. Okay, but there's definitely a case to be made for this larger uptrend. So this one is off of a key entry point. That totally makes sense. It's not would I be 100% certain about that uptrend? Maybe not, but there's definitely a case to be made for that. And this trend looks a lot stronger than whenever I was taking the one in what was basically a range. And this screen is kind of a little bit messy here. And it looks like my face is kind of in the way, so I'm going to move that out of the way. So hopefully we can see this. So in this picture, I wanted to show, okay, this range or this day started as a range. You have a leg down that has a break and a new low. Okay, and then now we're looking at this picture in the bottom left here, and we're looking at this second entry short. Okay, so after that break and new low, why are we taking a trade off the EMA? And the thing here is that, okay, so after this leg down, the break and new low, so the leg that went to a break and new low is significantly larger than the first leg. So there's definitely a case to be made for a larger downtrend, in which case you are still looking for shorts. And you can see the channel line is pretty confirmed here. You can see 1, 2, 3, possibly even 4 tests on the channel line. So this is pretty different. Off the EMA, you get some pretty strong rejection, whereas the trade that I took, there was lots of congestion and it wasn't the strongest bar. So now later on in the same day, you can see that this larger downtrend, which is right here, ends up getting a close outside and new low. But then we're looking to take again, a first entry, second entry short. Why is that? Well, again, this second leg down is significantly larger. So even after that downtrend had to break a new low, you can see there's one leg up and then you get another push down. So at this point, this is looking like a pretty strong trend. And again, you can make the case for a larger trend. So there's definitely a theme here. Whenever Thomas is doing this, it's generally during pretty strong trends. Let me move my video back up here. All right, how about this one? So he took this trade as a first entry long, second entry long, higher low off the EMA, even though this uptrend already had a close outside and new high. This one is very similar to a trade that's a little bit further back. And I can't see the overall structure here, but clearly we've been trending up basically all day. The other difference here is, again, prices came back, they touched the EMA, and then they held the EMA multiple times. That's pretty different than the one that I took, because the one that I took was the first touch of the EMA in a range that was a lot weaker. Whereas this one, again, comes back to the EMA and tests it multiple times. It's also a failed second entry short here. So there's a better reason to take this one. This one I felt was somewhat similar to the one that I took, because it's, for the most part, this is kind of range-like. Prices are breaking out of the range, so you are expecting prices to come back into this range here. And the thing here is, so it is a second entry short. This is the first time basically the prices are coming back to the EMA. And I guess prices did come back to the EMA here, even though there is a close outside and new high. Trying to think of what to say here. So he didn't end up marking this one because he said it's too aggressive and you need some sort of higher low. So that's basically just an example of, even though this one is a little bit even probably better of a setup because it's also a breakout pullback of this range, this bar has some more rejection to it and there's less congestion. So there's quite a few reasons why this is better than the one that I took, even though it is a breakout of the range. But still, he doesn't mark it. And the reason is because you already have that break in new high, so you really need to wait on some sort of higher low or something of that nature. Or you said a double trap, which I guess mine was a double trap. So yeah, just some things to consider there. This uptrend has a break in new high, but you don't want to take the second entry long immediately coming back to the EMA here. You have to wait on the higher low. And even that, he was considering more advanced. How about this one? So this uptrend has a close outside new high. Prices come back to the EMA, but they're rejecting off the EMA, and there's the case to be made for a larger trend before you're even taking the double trap off the EMA. So that one basically, I'll go back here. That basically wraps that up. I think the biggest takeaways, and I'll go back to the trade that I took. So the biggest takeaways here for me is that you generally only want to do this whenever it's a strong trend. Two, the congestion is a pretty big issue here. So you don't always need to really worry about congestion, but you really only want to do that whenever it's a strong trend. So this trade, like this pattern, could be okay in a strong trend. It's probably still aggressive even in a strong trend, but you definitely don't want to do this in a range. So in ranges, things are more prone to reverse on a dime. So now that this downtrend had a break in new low, because we're in a range, you might just reverse on a dime, even though you're not down to this overnight low yet. So that's basically what I'm thinking there. Knew this one was obviously a little bit more aggressive, but I've been, as of late, or as of recently, a little bit more focused just on learning than really caring about P&L too much. All right, how about this one? So I wanted to show this chart. So I drew this downtrend like this, and then dragged it out here because I thought the opposite side fit pretty well instead of drawing this as an overshoot. So originally I had it as an overshoot and then I ended up dragging it out. Well, Thomas had this drawn as an overshoot and Mac had this drawn as a closeout side and new low. Doesn't seem like it would be super, super important, but what ended up happening was it didn't really make sense to me why prices had rallied up so strongly here. And I ended up drawing this range, which ended up being incorrect and could have had repercussions later on. So that's just a little mess up on the trend that I'm going to have to take a look at. I guess the thing here is if this was not going to be an overshoot, I think you would expect the trend channel right here, or the trend line right here to hold. But you can see after that, prices just pushed right back up and through. So you probably want to go ahead and treat that as an overshoot and not expect the break in new low. Pretty much after this rally up, you kind of know that you're not really going to test that new low, but it makes a whole lot more sense if you are viewing it as an overshoot or as a close outside new low like Mac was right here. So that's basically it. I'm sure some days I'll have more to say than others. For the most part, I read the chart pretty well today. There were a few points in here where I wasn't too sure of exactly what the trend looked like, but I caught on to it pretty quickly. So that's fine. I got pretty much everything right there. Not too many bars. And then just a kind of misread back here in a more aggressive area. So that's really all there is to it. Again, just a little chart review basically for myself. I don't expect that this is really going to help too many more people. It's more so just for my own documentation.